Illinois. Our guest today is Ted from zaner Hedges out of downtown Chicago. How are you today? Ted, welcome to join us for Close Bell in downtown Chicago.
Thanks for having me, Caesar.
Let's start our conversation. How do you see the acreage report on this month's report? What is your opinion?
Yeah, that's a really good question, Caesar. The corn-bean ratio currently is at almost exactly at 2.5 corn to beans. And that's sort of in a territory that is asking for more bean acreage. I think there is a possibility that we do see something closer to about 85 million acres of beans, but I don't think it comes at a big expense to corn. I'm still thinking we're going to have somewhere between 91 and a half and 93 million acres of corn. It's just really everything's come down, and it doesn't feel like we have a whole lot of enthusiasm to plant, but when you've got very expensive ground, very expensive rents, and you got to plant, right? And wheat doesn't seem to be a great alternative. So, yeah, beans, I think, want to gain some acreage, but I'm not sure they really will, at least not in a big way.
No. How do you see the demand estimate is coming out for lower for beans in Mato Grosso, Brazil? Would you like to go to tell our listeners about this issue in Brazil?
Yeah. Yes. Hey, that's the burning question, right? What's going on in Brazil? You've had a lot of different estimates for that Brazilian first season soybean crop thrown out there. Some of them even down in the upper 130s. The USDA has been very reluctant to lower their numbers. CONAB has been reluctant to really aggressively lower their numbers. But you do have some private forecasters and some farm agencies in Brazil that are really throwing some low numbers out there, like a 141. The thing about that is that, China, the biggest buyer in the world, that's what really matters, right? And they're not buying U.S. soybeans aggressively, at least not any more than they normally would this time of year. And that says one of two things. Either they don't think that the Brazilian soybean crop is terrible, and they've got people in Brazil. They probably have a better idea of the Brazilian crops than the Brazilians do, certainly a better idea than we do. But they're not buying our soybeans aggressively either. So that means either they're not worried about the Brazilian crop, or they don't have the demand, or a combination of the two. And that is the problem. It's hard to say that the USDA needs to increase our export demand at this point, because we just haven't seen it on our weekly export sales. It's hard to justify that, even with problems in Brazil. So I don't know what's going on with China. One thing I will say is that they have imported a record amount of corn for this so far this marketing year. And China for years has been talking about moving their feed rations away from being very, very heavy on soybean meal, more to a more normal ration, which would include a lot more corn and a lot less meal. I get the feeling that's finally happening in China. The poor economy that they have, the unwillingness to spend high prices on pork, I think, is really facilitating that. Is probably going to be somewhere between 148 and 152 million metric tons. That's my best guess at the moment. That's well above what I think the trade has factored into the market at this point, and it's certainly above what the worst case scenario estimates have been. And by the time we get into early next week, Brazil will be close to a quarter of the way done with their soybean harvest. So rather than talking about a weather premium rally for soybeans at this point, I think what we really need to be talking about is the harvest pressure that happens when Brazil is getting deeply into their harvest.
How are the grain market for today's close bell in downtown Chicago?
Wasn't a great day for grain, Caesar. We had corn down 5.5. And earlier in the week, it really felt like corn had some upside potential. Maybe this was the bounce that a lot of people were looking for. Maybe this was the adding weather premium for that second season Brazil corn crop. But by the end of the week, we were barely higher on the week. So that was a very disappointing thing for the corn bulls out there. And for soybeans, it was even worse. At one point, we were 43 cents off the low. By the end of the week, we were only 6 cents off the low, and we ended up closing lower on the week with soybeans down 13 3/4. So that was a very disappointing week. It started with some strength. It looked good, but it ended up falling flat on its face. And I think it really sets us up for what could be a very heavy week for next week, unless something major changes over the weekend from a global macroeconomic perspective or something like that. But short of any shocking news that we're not expecting, I'm very worried about what prices are going to do next week.
Now that we were going to talk about the livestock market for today.
Yeah. So for as negative as grains were on Friday, I'm going to say it was a pretty darn positive day for the livestock sector as a whole, but really in particular for the cattle complex. The February live cattle were up almost 75. And that's pretty good, especially considering we had a sharply higher day on Thursday. So we were just kind of continuing to build on the strength, and we are now well off of the lows that we had from early December. You had cash cattle trading really for the most volume that we've seen since the beginning of the calendar year, and trading between 175 and 176. So it was a really nice week for cash cattle. It seems like producer or packers had been caught a little bit short after the winter weather that we had, the really harsh winter weather that we had for the bulk of January, really. So to see that cash cattle trading, that was a positive thing for the market. Really gave the markets a boost on Thursday, and again, we had some upside follow through on Friday. Now, the fed fat cattle are running right into the 100-day moving average. That's sitting just below 180. It was very close to the high that we had here for Friday. So you do wonder if maybe we might be due for a little bit of a setback. But overall, seasonality, I think, is good for cattle as long as that cash stays strong, as long as consumer demand stays strong, which I think it will. I still think there's more upside potential for the cattle. And feeder cattle had an even better day on Friday, with the March feeders up a little over 150, closing above that 100-day moving average, topping out at the 200-day moving average, but still looking really good. And seasonally, the trend is higher there as well. So I think there's more upside to come for the cattle complex.
What caused for cattle prices is between 223 and 230 in the feeder cattle. Could you explain our listeners about that?
Yeah, honestly, Caesar, I think that was kind of fair value even going back to November, the Thanksgiving time frame. However, with the funds liquidating long positions back at the end of the calendar year, I think we went down below what I would consider a fair value for feeder cattle. And this is just us getting back to that. The other thing is that lower prices, really kind of, I think, raised that fair value price. So I do think there's more upside potential. But, domestic demand has been really strong for beef. And so when we're going, when we're marketing our fat cattle herd, we've got to replace them. And fed cattle, that's what we do that with. So the replacement cattle, I think, are becoming more expensive as long as live cattle continue to advance, the cash continues to advance. I think that means there's still potential for upside for feeder cattle as well.
Finally, what is your opinion on the corn yields for this year in Brazil, especially in Mato Grosso?
Yeah. So that is a really good question, right? They're just getting started planting that second season corn crop. And while their harvest for the first season soybeans, which they got to get those out of the way in order to plant the corn, that's above average pace. They're doing that fairly quickly, but the corn planting is going slowly. And what that means is that they're reluctant to plant into some drier soils. They do not subscribe to the adage that we have here, which is you plant in dust and your bins will bust. They would much prefer to plant into moisture. So the longer they wait to plant the corn, the more that they push that corn crop into a dangerous period of time at the end of the growing season when they get their typical hot and dry time frame. So, between a fairly dry subsoil moisture profile that they have right now and the potential for that crop to go in a little bit late, that does make you question what the yields are could be for the second season, the all important second season safrinate corn crop, which is what they use for their export. What I will say on the other side of that, though, Caesar, is that generally speaking, when you have weather patterns, they do eventually change. And they've had a really warm and dry weather pattern throughout the first season of growing for soybeans. They might have a wetter, cooler trend at some point during their corn growing season. So that might help to offset that. But we don't know that, right? So I think there is some risk for that second season corn crop. I was kind of thinking that corn prices could factor in a little bit of a weather premium. But that felt a lot better in the middle of the week. On Wednesday, it felt like, okay, hey, maybe we're going to add another 15 to 25 cents to corn. But then by the end of the week, we had given back a lot of those gains. So it doesn't feel like the market's ready to add that weather premium just yet. But I wouldn't be surprised if it were to try to do that again at some point in the relatively near future.
Is there anything, would you like to go to the farmers about their respective for this season?
Yeah. Caesar, nobody really wants to hear it or really talk about it. But, it does really feel like the writing is on the wall now that we are not going to be able to enjoy the types of prices, the high prices, or at least the upper levels of what we've seen in the last couple of years. Things have changed. Demand has really slowed down and production has really caught up. The 177 national average yield for corn last year, even with a really difficult growing season, man, that really it doesn't leave us with much of a bullish discussion on the balance sheet. And for soybeans, as I mentioned, it feels like Chinese demand is softening for whatever reason. That leaves us with the potential of a growing carryover in soybeans. So, I think producers need to be fairly aggressive with their marketing this year. The last few years, it's been fine to just wait, but this is not one of those years. We are firmly in a downtrend. And if we weren't able to rally on a pretty significant weather event in Brazil for their first season for soybeans, I think it's going to be really difficult to get something to rally these markets. It might be really difficult to get excited about a weather issue here in the United States during our growing season after what we saw last year. I think the only hope that we have is that there's a catastrophe for that second season corn crop, but it's really tough to hang your risk management strategies or your marketing strategies on a what if catastrophe type situation. I think you have to plan for that second season corn crop being at least decent. And if that's the case, there's a lot more downside potential for corn and beans at this point. So I think you really do have to be fairly aggressive with your marketing, even though you don't love the prices compared to where we were for the past couple of years.
I agree with you, especially in the corn complex and beans.
Well, thank you.
My pleasure that you joined the show for today. Thanks. You're welcome to join the show anytime.
Well, thank you, Caesar, and thank you for having me. I had a great time, and I really enjoyed doing the show.
This is Ted S. from Zaner Hedges out of downtown Chicago, from back roads of Illinois. I am Caesar Delgado. Have a good day.